Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was scrolling through the comment section. I pasted one of the questions here because my computer was starting to get real funky. The question is, Andy, if you had to choose one, would you keep your portfolio or use that money to purchase a house? Which will outperform? Well, if you take a loan, and let's say the house is for yourself and you have full control over it, I would purchase a house and lock in a fixed rate mortgage for 30 years, and I would get a loan. That's what I did. And I'm paying the minimum amount off and then investing that other money. So that's what I did. And I bought it back um, 4 or 5 years ago. 5 years ago? I think I bought 5 years ago. Um, and what you have there is a leveraged bet. Housing is pretty stable. It kind of just stable. It's got seasonality to it, but year over year, I think it's going to march a lot higher, depending on where you live. And where I live, we have massive shortages of homes. I mean, I think the projections next year is we're going to go up 14%. The year before, which would be this year, 2020 to 2021, we were up like 20 to 25% up. And if you have a loan on the house, you're getting the full value of that house and it's appreciating off that full value. So off my original amount, I might be up like 200. Well, it'd be 200% or 3x or 2.5x or something like that is probably what I'm up on my down payment. The rest I'm paying back as a mortgage. And if you get a very low fixed rate mortgage, inflation's going to eat that away as well. So what you're actually paying back is less in terms of purchasing power dollars than what the loan is actually worth. And I think that's a good bet for most people. And if you buy a house and you can make improvements to it, you're going to be adding value as well. So I think that buying a house is a very good option. And it's probably one of the best because it also locks in your not only your rates, but it locks in your costs. If we have inflation and inflation gets pretty bad, the price of renting and all of that is going to go way up. So if you lock in what I would consider to be your largest cost for most people, you're locking your costs, and then you can start figuring out what your costs could be with some accuracy. Obviously, you've got home insurance that's going to go up over time. You're going to have property taxes that probably will go up. So there are some things that do go up. But if you're renting, the rent here in Colorado Springs has gone up tremendously. I think it's up 15% in 1.5 years, is what the data that I was looking at. And what's happening is people are trying to buy homes. There's not enough homes to buy. And now there's like this huge surge for everyone to rent because they can't get a house. And then rent prices go through the roof because there's not that many homes to rent. So, and if I were to, let's say I get a different job and it was in a different state, and I very well could get a different job in a different state, I would probably keep the house I'm in and buy another house and take some of my money and purchase another house with a loan against it, and to have two homes. And I would probably use both homes. It could be a potentially remote job, but I'm just saying I would keep it and buy another one and take money from other investments, and buy the house. But that's me. That's my outlook. Don't take it as advice. That's just my financial opinion. I think that we are going to have an inflationary environment. I think we have a housing shortage problem. And if you don't view it that way, then I wouldn't buy a house if you think that we are going to have some sort of crash. I am in the camp that I don't think we're going to have a crash. I think crashes come from real estate markets going into a hyper supply phase and then into a recession. You'll start seeing foreclosures. You'll start seeing days on the market that are very high, large inventories, and we just don't have any of that. We don't have foreclosures. We don't have. We have very short days on the market. We have like hardly any inventory in most of these cities. So I think that it's a good proposition of what you're asking. I think it's good to buy. For me, I would buy the house. That's me, and lock in the costs and ride it higher. And it is a leveraged bet because you have money that someone's loaning you. If another thing, and I should have done this even earlier, I should have been even more aggressive. I could have purchased a house. I tried buying one in 2012, and someone got the house before me, but I was going to buy a really, really nice one. And I probably should have kept looking during that time frame when it was really down. I didn't know as much back then in 2012 about how this all fit together. I didn't know that the housing market was that good of a deal. But if I had known, I would have bought a house. I still think it's a good deal even today. And I think houses, I read through the comments and a lot of people say, well, if people can't afford them, right now we need to price people out because we have far too many buyers and not enough supply. So housing is going to become very unaffordable. Affordability doesn't drive the housing market. Affordability depends on your supply and demand. Let me say that again. Affordability depends on supply and demand of homes. If you have a large imbalance between buyers and sellers, and there's not many sellers and a whole bunch of buyers, houses have to become unaffordable because the majority of people have to be priced out of the market. And that's what's happening today. We are short over 5 million homes that need to be built, and the homes are going to be pricing people out of the market. And it's going to be like that for a good while. Now, new homes are also going to price existing homes higher because the input costs in an inflationary environment are going to push new home prices higher. So what's going to happen is people are going to look at the new home prices and say, oh man, this is a $700,000 house. Well, I'm just going to look for an existing house. And then you got people fighting over the existing homes, getting 20, 30 offers or 5 offers or 7 offers. And the people who are getting those homes, they're bidding all cash, and they're going anywhere, depending on the house price, between $50,000 and $200,000 over the asking price. And those are the people getting the homes. So housing is going to get a lot less affordable. I think interest rates will go up. I think affordability will continue to decline over the next 10 years. That's my guess, or whenever this housing market kind of fizzles out. But I'm going to guess 5 to 10 years up. 5 to 10 years ahead of us. And it's not going to be something where you can just walk around and choose the house you want, like it was in the early 2010s. And that was probably the best time to buy a house in anyone's lifetime that's living. And I'm including 100-year-olds. So it means that you could go all the way back, and housing has never been that affordable in history, ever, with interest rates that low and home prices that low in the early 2010s. So I think that era is gone. And I think what's going to happen is it's going to go up, home prices and interest rates, and things are just going to get less affordable. That's the stance that I take. So would I purchase a house? Yes, I would, and I would even purchase another one. And I've been thinking about actually purchasing another house in a different location, in a good area. I'm in a good area right now. I'm not going to sell this thing. I'm in like what I consider to be one of the better parts of the city that I'm in. So I looked out and did that pretty well, but I could have done even better knowing what I know today. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already subscribed, and thanks for listening. This is Finding Value.